A lot of clients, they want a decent rate of return. They don't want to lose a lot, right? Which makes sense because when you're working, you're feeding these 401k plans. But when you retire, what we have is what we're walking into retirement with us. So that's why it's so important to be taking a look at your risk, the emotional end of investing, all of that, and why you work with an advisor.
Yeah, it's really important. As somebody who's starting out investing, your goal is to accumulate and see where you're at in 20, 30 years. But it is a big decision as you're 5, 10 years away from retirement, just deciding, okay, here's where I'm at, here's where I may be at retirement, what does retirement income, investing, all those things look like. So it's really important to just assess kind of where your financial situation is and also the emotional aspect you feel about investing. So right there from the SEC glossary of terms, it says risk tolerance is an investor's ability and willingness to lose some or all of an investment in exchange for greater potential returns. So your safer investments, tend to return less. Your more risky investments tend to return more, but it also comes with more downside. So the important piece within that being two components, the ability and willingness. Ability is kind of the financial situation. So what is your income sources, what sort of income need do you have relative to your portfolio size, and withdrawal rate? Right,
which is helping build that plan and looking at all those other variables that go into your retirement plan, because money is a means to get us somewhere, right? So that's ability, but also it's the willingness as well too.
Yeah, and that's the piece that, working with an advisor, or depending how you feel, that's the piece that you can help from the emotional end.
The emotional,
and that's how you feel about investing. Do you get really excited about gains or really worried about losses? Where do you fall across the spectrum? Do you understand markets go up and down and tend to go up over time, or is it a real worry when it's down? And so that's the important part to figure out as you enter retirement and you are living off of those assets.
Well, exactly. Because all of our viewers and also our clients as well too, we all do, and all advisors do a risk tolerance questionnaire. And I get it. Okay, here's this number, but it doesn't talk about the emotional end of it, right? How much emotionally can we stomach? And we're going to talk about that because once again, a lot of times these people are fueling those 401k plans, and that's all they're doing. They're not really looking at it. Now they spend a lot of time on it. So, for example, when the market is struggling versus, when the market is on fire, to your point, how do you react to that? That's why it's so important to stay the course in terms of the plan that has been set out for you or the plan that you've done yourself.
It's really easy when the market's down to say, I can't take anymore. But then you don't, depending how long you're out, what time you're out, you don't get that return coming back. Or, when the market's on fire, if you're in let's say a moderate type portfolio, you look at the news, you see the S&P every day. You feel like you're missing out on something.
You probably shouldn't do that.
Well, not every day. But you
don't do it every day.
But you feel like you're missing out on something. So it kind of leads to that chasing mentality. Yeah. And that's where, just depending where you're at, but timing mistakes can happen.
Thanks for watching Retire Vivid. Want to see more? Like and subscribe to our channel to stay up to date with exclusive Vivid content. Plus, be sure to watch our show Retire Vivid every weekend. We're here to help you get retirement ready.